Well, greetings to all my investment clients. My name is Walter Measers, your wealth advisor and CPA tax advisor. Apologies for the late recording. I didn't get a chance to record over the weekend. We're helping our youngest daughter, Victoria, move from Grand Rapids to Ludington, where she's starting her new job as a wildlife biologist in Silver Lake State Park. So all the best to our daughter, Victoria. Much success in her new endeavor. Just before I get into our weekly stock market recap, disclosure statement. Again, this video is exclusively being recorded for my investment clients. Anyone else watching this video is not intended as investment advice or solicitation to buy or sell any security. So at your leisure, just if you want to pause the video and read more detail, the disclosure statement. And then if you want to find out more about Trinity Wealth Solutions and about myself, Walter Measers, wealth manager, you can go to brokercheck.finra.org. Again, brokercheck.finra.org right here, and it'll give you much greater disclosure, in-depth background about myself and Trinity Wealth Solutions. So let's get into first the stock market. Where'd it go? Right here. And again, I'm recording this on Tuesday, June 3rd. But overall, the markets are really trying to find a direction. They're just kind of floundering. You know, one day it's up, next day it's down. And unfortunately, a lot of the ups and downs of the stock market are news-driven. And that's not a good sign. It should be the fundamentals of, economic growth, corporate profits. But over the last 2, 3, really 4 months, the market has been so sensitive to any news, especially, as the media calls it, Trump tariffs. If there's good news, markets goes up. If there's bad news on tariffs, the stock market goes down. So if we to refresh everybody's memory, every time I present these charts, remember we're comparing SPY, which is a broad market, which is right here, just in kind of blue, and then also comparing gold, which obviously is in gold. QQQ is in green. And then TLT, which is long duration bonds, which is kind of the pinkish. So these are broad categories of the stock market. So I want to just show comparisons of different asset classes, what those indexes are really doing, or ETFs. Just a reminder to my clients, we are still partially in the stock market. We have 30% exposure to the stock market, and the rest, 70%, is sitting in U.S. Treasury ETF BIL, earning about 4.4% safe. And why are we sitting, only 30% of the stock market? Remember, we were at 60. We trimmed. We took our profits, and now we're just waiting for the direction in which direction the market is going to go. Again, the research company that we utilize, we get daily information, technical analysis. So again, short term, they're somewhat bullish, meaning short term over the next month, 2, 3 months. The market could still hit all-time highs, but longer term, really, economic indicators or technical analysis saying, hey, they're bearish, meaning the market could significantly correct. And again, these are probabilities. Nobody knows for sure. But what technical analysis the company we use, They follow price, they follow trend, and they follow momentum, and they follow institutional money. So wherever, remember, if money's leaving the stock market, it's going somewhere. And that's really what they're trying to do, is give us direction, where the market is going to go. And remember, we got out of the market back in February. So if we look at year to date, I believe we got out February 28th. So it was starting to trend down. So we missed this huge drawdown right here. And then we got back in, I believe it was May 8th. So we caught some upside. But the key is, again, the strategy we're trying to implement is we're trying to minimize these drawdowns. Remember, the market here, technology was down 20%. That's technically a bear market. And the broader market, S&P 500, was down over 10%. So we missed this really drawdown back in April of, I think April 8th was kind of the bottom. So now the market is kind of starting to trend up. It's trying to find a direction. So if we look at year to date, the market is really, it's up. So it kind of wiped out all the losses. So it's in positive territory, but S&P 1.88, and NASDAQ is up about 3.3. And obviously gold did extremely well. Sometimes we get questions, Walter, why not? How come we didn't get into gold? Well, gold is right now peaking. It's at the top. And again, there's too much risk right now in chasing, something that's gone up quite a bit. It can be losing proposition. So again, let's go back to one day, meaning this is as of June 3rd, Tuesday. Markets kind of had a positive day, about NASDAQ about 0.9%, and S&P about 0.6%. We look at 5 days. Again, you can see the markets are kind of starting to trend up. 1 month, again, it's trending up, and that's what Technical Analysis, the company that we get research from, is seeing, that the short term, the market is starting to trend up. Right here, this was the April low, and we see there's a short-term trend. And I say short-term. Again, long-term, we're bearish. Based on technical analysis we're getting. Short-term, there is some momentum for the market to go up. If we go, again, 6 months, you can see there's a trend up. Year to date, same thing. If we look at 1 year, so you look at 1 year, we're still not at the all-time highs, but we're approaching, and that's going to be a critical. If the market does break through and moves above, the all-time high a year ago, then there's could be some momentum short-term to the upside. Again, remember, we have 30% exposure to the stock market, so we'll capture not 100%, and that's not the goal of our strategy, is to capture 100% of the upside. We always focus on minimizing the downside. So if we look at 5 years, again, there was this pullback. Now the question is the market going to trend momentum to the upside? And really, nobody knows for sure. If we look at a longer time frame, we can see starting in 2020, this was COVID, there was a trend up, trend down in 2022. Remember, markets lost about 40%, and now a new trend started to the upside. And the question becomes, can the market just continue trending up and up and up? And the probability is really getting lower and lower that the markets will just continue to trend higher and higher. So, on that note, we're just sitting on the sidelines. We're waiting for some clear direction. Now, if the market, for whatever reason, really starts to go up, we could get back more, a percentage-wise greater allocation to the stock market. But at this point, that's not what technical analysis is showing us. Again, this week, some critical economic data that's going to be reported. The big one is going to be jobs report, job market. And overall, again, what's driving the market short term is really these negotiations that the Trump administration is having with China, European Union, Chinese kind of tariff negotiations are kind of stalling out. So not sure if there's going to be a deal or not. So the market really is living and by news, especially about tariffs. And if there's negative things on negotiations with countries as far as tariffs, the market starts to pull back. The other big one is really the Federal Reserve. Their minutes are showing that there's a debate now. Are they going to lower interest rates or are they stay the course? And the economic data is showing more and more there's an economic slowdown. Is that going to happen? A recession sometime middle of this year? Again, nobody knows for sure, but it's definitely trending in that direction. So on that note, hopefully you enjoyed the video. Again, sorry for the late posting of this video, but I'll be posting another one hopefully this weekend, Friday or Saturday, and we'll see. We'll see which direction the market goes. So right now, portfolios are doing kind of what we expect. Our clients' portfolio, we have some exposure to the stock market, but majority we're earning about 4.3%. 70% of clients' assets are safe, guaranteed. So even if there was a pullback, a major pullback, our clients will not see a significant correction in their portfolio. So thank you for watching. Stay tuned for either Friday or Saturday our weekly stock market recap. Thank you so much. Have a great week and see you soon. Bye now.